Welcome to the Small Business Tax Savings Podcast, your weekly dose of accounting and tax tips specific to small business owners. You will be on your way to growing your business and paying the least amount in taxes as legally possible. Here's your host, Mike Jesowshek, CPA.
Hello and welcome back to another episode. Today's topic is portfolio income and non-taxable income. How is my income taxed? And this is our fourth podcast episode that we're doing on this How is my income taxed series. And really it started because understanding how different types of income are taxed can be confusing, but it's so important in understanding how to bucket your various types of income. And so we got questions on this in our free Facebook group as well as our tax minimization program. So that's why we wanted to put this little combination of episodes together. By the way, if you're not a member of our Facebook group, join now. Just go to Facebook, type in Small Business Tax Secrets, answer a few questions. You'll be let in and join in on the conversation. If you're also not a member of our tax minimization program yet, you can check that out at taxsavingspodcast.com/tax. Now, if you have not checked out our first episode on what is ordinary income tax versus capital gain tax, you're going to want to be sure to check that one out. That kind of goes through the various types of taxes. And then now we're moving the conversation, the various types of income and how it relates to those types of taxes. So in our second episode, we did earned income. Last week, we talked about passive income. And now today, we're going to be focused on portfolio and non-taxable income. So this is going to be a fairly quick episode because it's pretty straightforward, but let's start out with talking about what is portfolio income. This can also be called investment income, but per the IRS, this generally includes interest, dividends, capital gains, and other types of distributions, including mutual fund distributions. So how is portfolio income taxed? The great thing is that portfolio income is not subject to FICA or self-employment tax. Now, various types of portfolio income are going to be taxed differently. That might be via ordinary income tax rates or capital gain tax rates. And again, our first episode talked about both of those, what those mean and what they're taxed at. So if you haven't checked that out, go there now. But we're going to go through some examples of types of portfolio income and how they are taxed. Let's start with interest. Interest is taxed at the ordinary income tax rates. Unqualified or ordinary dividends are going to be taxed at ordinary income tax rates. Qualified dividends are going to be taxed at capital gain rates. Municipal bonds are typically going to be tax-free at the federal level, but they may be taxable at the state level. If you have a sale of an asset or a stock that you own, that's going to be taxed at capital gain rates. If you have a taxable retirement account, a traditional 401k, a traditional IRA, these are going to be taxed at ordinary income tax rates. And if you have Roth retirement accounts, those are going to be tax-free because, again, you don't get the benefit going into them. Now, one thing to also note is that for those of you with a significant income, you may be also subject to the net investment income tax, NIIT. And this is going to be an additional 3.8% on top of whatever the usual tax might be. So what is the good thing about portfolio income? The good thing about portfolio income is that it is not subject to FICA or self-employment taxes, and certain types get the preferred capital gain tax treatment. Now, one major downfall to portfolio income is that typically you're now not able to take deductions or write-offs against it like you can with passive income or like you can with self-employed income. Finally, let's talk about some non-taxable income. Fortunately, there is some income out there that is not taxable. And so we're going to be talking about a few of those. There is gifts and inheritances. Now, those may be subject to estate taxes paid by the estate itself. So we did an episode on this a while back called How Are My Assets Taxed When I Die? But you might want to check that out. But the income, and one thing to know is that the income that the gift produces would be taxable. But traditionally, gifts and inheritance are not taxable to the person receiving them. Most employee benefits are non-taxable. Health savings account funds that you use for qualified medical expense, no tax. Most life insurance proceeds, no tax. Municipal bond interest, at least on the federal level that we talked about. IRA rollovers, if you roll over your IRA from one account to another, no tax there. Property settlements at divorce, child support payments, workers' compensation, disability insurance proceeds, and this is mainly if you paid for the premiums yourself. federal tax refunds, if you get money back at the end of the year, state tax refunds, and this is specifically if you did not previously itemize. Most scholarships and fellowships. Some states have no income tax. You might be living in a state that has no income tax. That's great. Roth retirement accounts, again, assuming that you meet the rules and are deducting and taking money out at the right time. So let's go through a quick summary of portfolio income and not taxable income. Portfolio income, aka investment income, is interest, dividends, capital gains, and other types of distributions, including mutual fund distributions. Portfolio income is not subject to FICA taxes or self-employment taxes. That's the beauty behind it. And depending on the type of portfolio income will depend on how it's going to be taxed. It's either going to be typically subject to either ordinary income taxes or capital gain tax. But the various types of portfolio income will be taxed differently. And finally, there is some income that you can receive that is non-taxable. So that has been a wrap on our series on how is my income taxed. Now, this is meant to be a really good primer, an introduction to how various types of incomes are taxed so we can start to look at various tax buckets. How can you separate your income into different tax buckets to help minimize taxes? Now, we started out looking at earned income. Then we got into passive income and finally finished up here with portfolio income. But before we talked about all that, we talked about ordinary income taxes. What are they? What are the rates on them? What's subject to them? And we had talked about capital gain tax. What are the rates there? So if you have not checked out that episode, do that first. Check out what ordinary income tax is, what capital gain tax is. That's going to help you understand how this income is taxed. As a reminder, we started with earned income. This is going to be income like your W-2, payroll, self-employed income if you're a small business. That is typically going to be subject to FICA or self-employment taxes, as well as your ordinary income tax rates. Then we talked about passive income. This is going to be rental properties or businesses that you don't actively participate in. These are typically going to be subject to ordinary income tax rates, but no FICA, no self-employment tax. And the beauty behind these is that if you have a passive loss, you can use it to offset passive income. Again, that's also a downfall. You can't use passive losses to offset ordinary income tax. And so that was kind of a downfall we talked about. And then finally here, portfolio income. These are going to be those interest dividends. Think of things like stocks and things that you're invested in that type of realm. And again, beauty about those is there's no FICA, no self-employment taxes on them. But they're taxed at either ordinary income tax rates or capital gain rates, depending on the type of device it is that's earning that income. So this is, again, a series that we wanted to do to just introduce everything here. We're going to be diving into a real estate series, but this is going to be kind of that cornerstone to understand how is that income taxed. I hope you find it helpful. I also want to encourage you to check out our tax minimization program. If you're looking to lower your taxes, you're looking for tax strategies, we are constantly putting more information in there, constantly adding information in there. As part of your membership, you get access to our library of tax strategies, implementation guides, videos, downloads, and all sorts of content inside there. We also have our stress-free bookkeeping training program included in there. You have our Ask a Pro feature, which gives you unlimited email access to our team. It's kind of like having an accountant in your back pocket. When you have those questions that pop up, reach out to us via email. We'll get them answered. We have monthly group trainings. We have a private Facebook group, and we also have a partner directory. So if you need to be introduced to somebody, we have somebody for you, whatever it might be, whether that could be setting up a retirement account, talking to a lawyer. We had a client the other day that said, Mike, I want to do a private jet somewhere. We have a partner for that. We have a connection that we can at least get you set up with something like that. So this is all included as part of our tax minimization program. You can check that out at www.taxsavingspodcast.com/tax. I want to thank you for listening to another episode. I ask that you please leave a review on wherever you may listen to us so we can help spread the good word, spread the tax savings across the small business owner world. Thanks again for listening to another episode, and I will see you all next week.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.